Hey guys, and welcome back to my channel. In this week's video, we are going to look at November sales stats for both Greater Vancouver and the Fraser Valley. We're going to look at 3 policy changes that are either in effect or coming into effect that's going to help you as a home buyer or a home seller. And then we're going to wrap it up and talk about how you can prepare yourself for the 2025 market. Real quick, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. When I'm not making videos like this, I'm helping people just like you buy and sell real estate across the Lower Mainland. So if that sounds interesting to you and you wanted to chat with me one-on-one, you can book me for a free call in the Calendly link below and on screen, and subscribe to this channel so you don't miss a future video. All right guys, I want to hop right into it. November sales stats for Greater Vancouver, Fraser Valley. You'll read the headlines if you're out there looking for them. Sales up significantly year over year. Greater Vancouver and Fraser Valley up 28%. From a sales quantity perspective. And so when you read those headlines, you might be thinking, you know, the market is frantic, it's feverish, we're having a whole ton of sales. You know, when you compare it to last year, of course, but we've had a few slower years now, a couple slower years of sales. So year over year comparisons, not great, especially when we've had kind of some inconsistent years with obviously pandemic, etc. So, you know, the metric I like to look at specifically is the 10-year sales average. And on the Greater Vancouver side, at least, we were about 13% off of that 10-year sales average. So yes, October, November, definitely much busier months. I had been saying at the beginning of October or September, I could feel things shifting. That has definitely happened. We had time periods earlier this year and last year where we were off of that 10-year average by 20%. So, you know, that gap is shrinking. You know, make no bones about it. Things are getting more active out there, both in the Fraser Valley and Greater Vancouver. When it comes to a pricing perspective, and this is where I think things get really interesting, is, you know, year over year pricing. If we look at condos on both sides, on either side of the Fraser River, you know, both condos down 1.2%, Greater Vancouver and the Fraser Valley, price-wise, year over year. So when we compare ourselves to November 2023, the reason I find this very interesting, very telling about Vancouver real estate market, if you've been following my channel for a bit, we've talked a lot about condo inventory, new construction, new buildings finishing, all of these vacant units being thrown onto the market at the same time. How, you know, you would expect that this was going to create a bit of a race to the bottom when it comes to condo prices, and we just didn't see that. 1.2% on a $750,000 condo, that's like $9,000. And you know, the crazy thing to wrap your head around is a lot of these condos that are on the market right now, like I just said, new construction, they're sitting there vacant. There's not a lot of income coming in. So, you know, the resiliency of these condo owners when they're selling it's shocking to me. It's shocking to me that they're holding on to this product. You know, obviously these condos are very deep. There's a lot of equity in these condos. A lot of owners have a lot of equity in there. They're not willing to take a hit. Now, I've done a few deals this year with buyers, a couple of them from YouTube, where we're looking around at these condo buildings that just complete, and we're searching around for the best deal. We're finding maybe a floor plan we like, targeting that specific floor plan. There's maybe 4 or 5 of them in that building, and seeing who will give us the best deal. And we are ultimately finding good deals that way, but as a buyer, you have to be willing to accept whichever one out of those 5 or 6 or 7 where the seller's actually willing to maybe take a loss or sell it at a lower price. So, you know, the resiliency of prices, and we've had a slower year. Sales have been slower. Rates have been generally higher. And the fact that, you know, condo prices have relatively held, they've barely decreased. I think that's very telling about our market. When we look at it from a sales to active ratio perspective, so this is how we determine, you know, are we in a buyer's market? Are we in a seller's market? And we break it down by product class. Detached homes last month, they're teetering on buyer's market to balance. They're right on the edge. Condos are basically on the edge of a seller's market and a balanced market. And attached homes, which are essentially townhomes, they are actually in a seller's market. So the condos in October, they were actually in a seller's market. I mentioned that if we saw some sustained time of condos in a seller's market, we were going to see prices increase, but they actually dipped back into balanced territory. So definitely a lot of treading water happening, a lot more activity happening. By the time you're watching this video, we'll have another rate announcement 4 days thereafter. Everyone is expecting it to be a cut for sure, whether it's 25 basis points or 50 basis points. Up in the area, it's almost 50-50, most leaning towards 25 basis points. But it's really hard to make the call. We have GDP numbers come out, and we have the 6th consecutive quarter of GDP decline. We have the Canadian dollar essentially tanking. We have Trump in the US coming out and saying, he wants to make Canada the 51st state and put Trudeau in as governor. There's so many political things and things that stretch beyond our borders that are going to be a factor. But as we head into next year, fairly safe to say we're going to see a cut in December, probably a cut in January. And so this leads me to what we're going to talk about next, and that's what exactly is going to happen now as we head into 2025. So outside of these rate cuts that are, very likely to at least fuel some more buyer activity, the federal government has put some things in place now to make it easier for first-time buyers, to try and incentivize developers, and to help you if you have a mortgage renewing. So 2025, 1 million mortgages will be renewing. And so currently right now in place as of the last couple weeks is if you're renewing your mortgage and you switch lenders at renewal, you do not have to undergo the stress test. And this is where they basically qualify you at the contracted rate plus 2%. So in the past, when you would switch lenders at renewal, that new lender would have to stress test you. So it'd be much harder for them to get you qualified and give you a really good offer on your mortgage renewal. For banks, for lenders, the lenders that already had your business, renewal was a slam dunk. They mail out a letter to you with a super high rate on it. Many people will just look at it and say, okay, this is something I need to sign. And away they go, and they're paying, a higher than market rate. So this was money in the bank, pardon the pun, for the lenders, these renewals. So now, you're going to be able to shop around for your renewal. So what I would say to you is, make sure you shop around, but also make sure your existing lender knows that you're shopping around. Let it be known. If you're with RBC, say, hey, I'm getting some pricing from TD, from Scotia, and vice versa. You want to make sure that they know that you're shopping around. This is going to allow you to get the best possible rate. The reason the federal government did this is they wanted to see more competition at renewal time. They wanted to make it easier on Canadians to find more competitive rates. So again, this is already in place. So if you're renewing your mortgage, keep that in mind. Shop around, call different lenders, work with a mortgage broker who has access to all of the lenders. But make sure you shop around, because saving a little bit off of your rate, it may look like a little number, but it amounts to tens of thousands of dollars in interest costs over the term of the loan. And 2 more policies that are actually going to be put into place now, December 15th. The first one is insured mortgages. That threshold currently sits at $1 million, and that's actually going to shift now up to $1.5 million. So what that means is you can put less money down, up to 1.5. So how it works today is if you are purchasing a $1 million property, for instance, as soon as you hit the $1 million mark, you have to put 20% down. That becomes an uninsured mortgage. So you're putting $200,000 down on that $1 million property. Now what the federal government is changing is they're saying you can go right up to 1.5 million and now have an insured mortgage, meaning you can put less than 20% down. So if we look at a $1.5 million purchase price, today you're putting down $300,000, whereas as of December 15th, you could put down as little as $125,000. Now I know you're probably thinking, who's putting down $125,000 on a who is going to put down $125,000 on a $1.5 million purchase? The answer is not many people at all. What I'm seeing in my business is, even at price points at 700, 800, 900,000, buyers are putting down 30%, 40%. So, especially here in Vancouver, where our home prices are much higher than other parts of the country, outside of Toronto, it's not going to have as massive of an effect, right? Because you still have to get qualified for now a larger loan, which is the difficult part, which leads to, part two of what the government is implementing, also December 15th, is they're going to make it so that if you're a first-time home buyer, you can basically do a 30-year amortization, but also if you're buying a new construction property, you can do a 30-year amortization on that as well. And the reason why that second piece is important, anyone buying a new build, is this is to incentivize builders to keep on building. If you've been watching my channel for the last 4 or 5 months, we've done several videos on development and development screeching to a halt and margins getting eaten up and all of the costs exploding. And for developers, even just getting a shovel in the ground to get a project going, extremely difficult right now. So in essence, by doing this, when you do the 30-year amortization, you're basically increasing the buying power, say 6 to 8%. So when you're increasing the buying power, what that essentially is doing, I believe, from the federal government going to the developers saying, hey, we're going to give you a bit more margin in here. We're going to make it easier for Canadians to take on more debt. We already lead G7 countries in household debt, but that's a video for another day. So we're going to allow people to take on more debt. We're going to make it easier. When you take the 30-year amortization, your payments come down. Your payments come down a little bit. So it feels much better. Your cash flow scenario is much better, but you're paying a lot more interest, but you can also get approved for more. So in essence, what's happening is the government is putting in policies that's going to further increase real estate prices. It's going to further push prices up because people's buying power goes up. They're able to get approved for more. Call it what you want to, but this country is based on real estate and real estate values going up, and the real estate industry and having developers build, not just from a housing supply perspective, but from a jobs perspective, and actually, being able to provide employment to people. So, you have this machine that's built on real estate. I've said it before, the government they're not going to let real estate fail, so to speak. They might encumber people or make it easy to be encumbered by more debt, but they are not going to have these prices drop off. So now when I look into 2025, and if I'm a seller, for example, I say this once a year, I have to say this again. A lot of sellers say, you know what? I'm going to wait until the spring market. I'm going to wait until the end of February. I'm going to wait until March. I'm not going to put my home on the market. I'm just going to wait. And my suggestion is I believe that the spring market is going to come early this year. We have a rate cut happening next week when you're watching this video. Very likely one in January as well. We're already seeing activity uptick. So I believe that spring market is coming earlier. I think we're going to have a busier January, a busier February. I'm not saying prices are exploding. And that's the second part of this is the reason we've had activity where it's been at recently is because we've seen some pricing come down, and it's come down to levels that's actually appetizing to buyers. So again, if you're a seller, perhaps think about jumping out the gate in January. We have a lot of listings that drop off the market on December 31st. Some of them will relist immediately, but a big chunk of them will say, you know what, I've been on the market for 3 or 4 months. I'm expired now. I do want to sell. I'm going to wait for these rate cuts, so I'm going to place my home on the market in March. So you have this window of time where inventory drops off. And when inventory drops off and you're a seller, you're not competing with all of that inventory. Now, if you're watching this and you're a buyer and you're thinking, okay, 2025 is going to be my year, what can I do right now? And December, it's a great time, of course, to spend time with family and to enjoy the holidays, but I also believe that it's a great time to start getting your ducks in a row. And that may be for pre-approvals, right? That's usually the first step. You want to see what you can afford so you can understand, which areas you can purchase in and what types of properties. Start making connections and relationships with a realtor you can trust. If you don't have a realtor you can trust, start making connections, reach out and chat with people. You can book me, of course, but have those conversations now so that you're ready to jump out the gate. One of the questions I get from a lot of first-time buyers, from a lot of buyers in this, consultation process, I would say at the start, is they're worried about locking in a pre-approval now, understanding that rates may come down further. And it's important to know that a pre-approval is not going to commit you to a specific rate. And in fact, you can better your rate. If the rates get better by the time you complete on the property, that's when you get the keys, you can better your rate right up until that point. So don't think that by getting ahead of the game, by getting pre-approved now, you're going to hurt yourself from a rate perspective. You're just going to get more line of sight in terms of, what you can actually do in this market, where you can move to, what type of property, what level will be comfortable for you. If you're thinking about a 2025 purchase and you start this process in, say, February or March, market gets really heated in the spring, and that's when you're starting to have to write offers you're not going to be so comfortable with. They might be offers where you're doing 3-day subject removal. You may be waiving the inspection clause because you're up against 3 or 4 other offers. And nobody likes that scenario. And especially for first-time buyers, the best advice I can give to people is it's always a better deal or a better transaction, a better process when you're able to do it against less competition. So there you have it, guys. I hope you enjoyed this week's video. If you did, hit the like button, because what that does is it takes the video and it sends it out to more people so they can also learn from it. And if you enjoy this weekly real estate content, subscribe to this channel so you don't miss next week's video. And lastly, again, if you're in the Vancouver area or the Fraser Valley, you want to chat with me about real estate, you can book me for a free call, or you can just give me a call, send me a text, shoot me an email, whatever you prefer. I'd be happy to chat with you. But I want to thank you once again for watching, and I look forward to seeing you next week.